But let's understand right now whether or not after hitting those recent peaks, where we're headed. Is there more legs to the bull run? Are we in for consolidation? What's the view on the Nifty Bank Index? Gautam Shah now joins in on the show to discuss just that. Hi Gautam, good to have you with us. I believe your view is that as of now, you're not expecting any fireworks on the index. So do you think that given that we've already popped the bubbly, now it's time for a bit of consolidation and that's inevitable?
Good morning. I think we are seeing fireworks in stocks. I think that's really the best way to describe the markets in the last couple of months. On the index front, I think we've run up really hard in the last 7 to 8 days. And therefore, there might not be significant room on the upside because the levels of 19,600 clearly will be a bit of a problem from a short-term perspective. But I think eventually the number will get cleared and we are working with a slightly bigger target of about 20,400. But as we've been maintaining for the last 6 weeks, this is about stocks, this is about themes, this is about sectors. Index in percentage terms isn't going to do anything special. And at the same time, you do have a lot of support on the downside. So there are no signs of topping out. The market looks very well protected by a number of index heavyweight stocks. I mean, look at what Reliance has done in the last 1 week. And I do see the IT stock come back as well. So the index, I think, broadly will be in that 18,900, 19,600 kind of a band for the time being. And eventually we head towards 2,400. But in the very period, I think we are actually focusing on the recent underperformers. So we love the metal space, we love pharma, we love IT, and we also like the auto space. So these pockets we are betting on the long side.
Food for thought there, Gautam. Let's take it one by one. Starting with Reliance itself, you talked about how it's a very, very stock-specific market. So talk to us about that. What's your take on Reliance? Is it headed to those all-time high levels, surpassing that, maybe 3,000 on the cards?
See, you've seen a lot of stock rotation and sector rotation in the recent past, and therefore the baton is being passed from time to various stocks and various sectors. So that's really what has happened to Reliance. It was an underperformer for a very long time. It's come back in the recent past. And this 2850 area is a very important resistance. To be honest, I'm not still very gung-ho on Reliance. I don't think the stock can really do anything special from here. It could see a bit of a move, maybe another 5-7%. But the bigger opportunities is in some of the other sectors. So Reliance, I think it's just made a comeback. It's covered up for the recent underperformance. But unless it really gets past 2850, I don't think something special is going to happen.
The outlook then? You're saying you need to be stock specific, you need to be theme specific. Let's get stock specific, Gautam. Which stocks should one look at?
Well, we are very closely looking at the metal space. Now, I think this is more of a contra view, I would say, because not many market participants are too excited about it. But the way we read the charts, I think a special move is coming. We're already seeing JSW Steel do so well, trading at lifetime highs and clearly good for a lot more. We also like the way Tata Steel is shaping up. We like the way SAIL is shaping up. And JSPL has been a favorite all along. So I think these 4 or 5 stocks which I mentioned have the potential to move up 12-15% from current levels. So that's clearly the focus area. And, aside of that, I think Pharma has been our poster boy for the last couple of months. We've seen special moves there, Dr. Reddy's, Glenmark, DV's Lab. And I think it's going to get better. So our working target of the Pharma is about 15,000 to 15,500. So clearly there is a lot of room on the upside. Please understand, while the Nifty is already at life high, some of these sectors have a lot of catch up to do. So we are avoiding the high flyers like FMCG, infra, capital goods, which have already run up in the last 2 months, and focusing on some of these, other names.
Pharma being the poster boy, but the poster boy of the big rally in the last 1 month has been clearly the auto space. Do you think it's getting a bit frothy there? Most of the stocks, whether it's M&M, Bajaj Auto, Tata Motors, they're all sitting at record high levels. Do you see them going up further, or a bit of consolidation, profit booking is warranted?
No, I think they will continue to run up. I think this is a very special, mature kind of a move that you're seeing in the auto space. And it was coming for a very long time because a stock like Tata Motors was in a sort of a range for a year. It underperformed for a long period of time. And therefore, it really, broke the shackles, I would say, a month back. And after, it's just no looking back for Tata Motors. And I do believe that even from these levels, you could at least see a 20-25% up move, maybe even 4 figures if you have a 2-year kind of a time frame. Maruti we love. M&M has been doing all the good things. Bajaj Auto is at 5,000 and I think is looking good for a lot more. I think that stock is also setting up. So on an overall basis, if you really look at the auto index, there is clearly a lot more upside. The index took 2 years to cross some important levels. And therefore, I think the ratio chart versus the Nifty has shaped up really well. And our working target is about 17,200.
Gautam, what happens to banks now? I mean, you fleetingly mentioned Bajaj Finance, but in the pure play banking space, can HDFC Bank now do the magic, considering it's a behemoth and a combined entity soon? Or do you think there is any other banking stock which is going to show leadership?
See, a month back, there was this concern that the Nifty was going up and banks were not participating. Remember that 6-week period wherein the bank Nifty was absolutely flat. And thereafter, once that 44,000 number got taken out, and the way some of these top banks, including HDFC Bank, which just rebounded from the 200-day exponential moving average, it told you that it was just a resting phase before the next move up. So I think the recent breakout was genuine. And I do believe that the banks can lead the market higher from current levels. In fact, our working target of the bank Nifty is about 47,500 to 48,000. There is a bit of a bump around that 45,500 number. Once that gets cleared, I think there is no looking back. And because it's covering up for 3 months of underperformance, the scope is huge. So I think we actually love SBI. We like the way ICICI Bank is placed at this point. And HDFC Bank, I think pretty much is a no-brainer. It'll take time. It will not give you momentum, but definitely gives you stability to your portfolio.
Financials itself, do you have a preference over PSU versus private?
See, off late, we believe that the PSU theme is huge. It's played out beautifully over the last 6 months, and it's going to get bigger and bigger. I think we've all seen what HAL, the PFCs, the RECs, the BELs of the world have done, Coal India, NTPC, Power Grid. We like all of these stocks. I think as a basket, we feel that over the next 6 months, there's going to be a lot of upside. But the recent trend that I've noticed in the last 1 week is the comeback of PSU banks. So I think SBI, Canara Bank, BOB definitely fit the bill. And I think there could be a trading opportunity there. I'm not very sure from a buy and hold perspective, but definitely a trade is there for the next 2 to 3 months.
Gautam, what happens to IT? Does it continue to get slapped around and weigh heavy on the markets? Given that tomorrow we're going to kickstart IT earnings as well with TCS and HCL.
I'm quite optimistic, to be honest. I just feel when I look at the ratio charts, which is IT index divided by the Nifty, it is at a 10-year low. So it just tells you that we are at an inflection point. Either it moves big from here, it sees a mega turnaround and does well over the next 6 to 12 months, which is actually my view. Or if the breakdown happens on account of average or below average results, that would be a bit concern. But the way we study the charts, I think the downside potential is 5% and the upside potential is 20% for most of the top large cap IT stocks. So with a 1:4 kind of a risk reward at a 19,400, 19,500 index, IT is a buy from an investment perspective.
Gautam, what's your view in this entire fight of mid-caps versus large caps? Mid-caps had done quite well over the last couple of months, but now large caps are also participating. If you had to take a pick, large cap versus mid-cap, what would you pick?
Well, as a technician, it's very easy. I will just pick mid-caps and small caps over the large caps because, we love using the ratio charts. And if you do a mid-cap index divided by the Nifty, you'll see that chart is upward sloping and there's room for a lot more upside. So I think for the rest of this year, I do have great visibility for the mid-caps and small caps, and I think they will continue to run. In fact, I'm reminded of the 2017 and 2007 period, wherein in those years, if you remember, the index did nothing and stocks just continued to move higher the entire year. 2023 for mid-caps and small caps is looking something like that. So the market on an index level will keep scaring you from time to time. And anyway, the valuations, some people say, are a little extended, which I think is a fair argument. But mid-cap, small caps have a lot of room because in the last 2 years, the damage was huge. And I think they were under-owned. So there's going to be a lot of money flowing in there.
What about the entire defense and railway sector? Are those stocks getting a little overheated?
I think railway is definitely overdone. So I wouldn't be looking at these prices. In fact, our recommendation is to take profits in the railway stocks. But defense is a very big theme. Defense is a theme for the next 3 to 5 years. So I don't think that's going anywhere soon. So I think stocks like HAL definitely fit the bill even at current levels. Just be careful in terms of your timing because it's more from a long-term perspective. But so in a nutshell, avoid railway, but definitely buy defense.
Okay, appreciate your time. That's some stock-specific takes coming in from Gautam Shah, talking about a positive view on the likes of JSW Steel, Tata Steel, SAIL, bullish on stocks within the financial space as well as autos.